Prices of crude remain squarely in focus today. Brent crude prices have hit a 9-month high on back of increasing tensions between Iran and the West. On your screens, Brent crude prices are trading at around $123 a barrel, while the NYMEX crude is holding, or 124 rather. So good gains coming in, more than 1% of gains coming in for the Brent crude prices, while NYMEX is holding around 106. So fresh gains coming in for the crude prices. In the precious metal space, gold has come off its 3-month highs on weak economic data out of Eurozone and China. Though the fundamentals remain supportive of further gains in the yellow metal, it also has seen a gain, 1775, holding on to that one in the markets as well. Our panel of expert guests are here with their views on the commodity market today. With me in studio is Vijay Bhamwani, CEO of BSPLindia.com, Naveen Mathur, Associate Director, Currencies and Commodities, Angel Commodities in Mumbai, and Joshua Raymond is Market Strategist at City Index, and he joins us from London. Let's start with you, Vijay, and starting with the crude prices really first, the kind of highs that it has been making on a daily basis, where do you think that really is stopping right now?
Manisha, there is no denying the underlying buoyancy in the outlook of crude prices. For example, WTI crude, which is now currently trading at 106 plus levels, is likely to hit 108 levels, but the momentum is not as strong as one would have expected it to be given the underlying tensions in the Iran imbroglio. So I think 107.5, 108 is likely to be a temporary resistance on the upsides. If it is remaining above 108, I think there would be a bear squeeze and an accelerated up move. But right now, I think crude traders seem to be pretty much sober, and they're basically inching prices higher rather than tearing them up.
Sure. But we have seen a gradual uptick on a daily basis. Naveen, coming to you for this one, how do you look at the Brent crude prices, 124 holding on to that one, and how would you trade it in the Indian markets?
Thank you very much, Manisha. See, as Vijay was saying, I think the markets are a little bit bullish, but they're not too bullish in terms of what we have seen in Iran. And I think the overall global economic front, if you see, except for the Greece bailout, which happened on Sunday and Monday, I think nothing is positive as such, which has come new to the system. That also is a big question mark. And seeing all that perspective of currency, which is dollar strength, the Iran perspective of the supply constraints, and the economic scenario, I think the range-bound movement would continue in crude for some time. And 106 on the WTI and maybe 126 to 127 levels for the Brent would be a good thing to see off, and 108 maximum on the WTI. But if you ask me today what an intraday trader or something on the MCX can be done, I think the buy position can be taken in with the inventories coming in. The MCX crude can be bought in at around 5,240, Manisha. Stop loss recommended would be at around 5190, and targets in the range of 5320 to 5330 on the MCX.
Joshua, let me get you into this as well, and let's start with the base metals with you. And copper inventories are down 18% this year, while the data in the recent days has not been so positive. But how do you look at the copper prices faring now?
Well, obviously, I mean, you look at the relationship between inventories, and particularly it's a very similar story to where it was about a year and a half ago, where you had China hoarding inventories because there was a bit of a standoff really between the Chinese authorities and businesses hoarding metals and copper, for instance, to try and wait for better copper prices to actually come back in and actually buy a bit more. And what happened, obviously, was you saw copper prices fall off quite sharply. And we're having a bit of a similar scenario at the moment, but there are some other key fundamentals that will actually probably play into it, which is the fact is you've got Chinese growth slowing down, and that could also have a bigger impact as well on copper prices and also metal demand. So those two key fundamentals are actually playing a role at the moment, and so it's a good standoff. It's good for investors to watch on the sidelines, but it can create a bit of volatility in the prices as well.
Sure. Vijay, what would you say? Because copper prices have been inching on the higher side. Would you say there are much more gains coming in here? Or would you look at aluminum, because that has been really another gainer?
Aluminium, Manisha, we recommended yesterday, and it's already somewhat in the money. I think 111 levels, as pointed out yesterday, would be the near-term target. That's where I would like to shave off at least 50% of my long positions. As far as copper is concerned, I think 419 to 420 in the absolute near term would be a resistance, because copper, although is inching higher, is definitely showing some signs of labored up move, if you will, and it needs to basically stay above 424 plus levels for the bulls to accelerate their buying procedure.
Joshua, let me come to you with this one. And aluminum has seen strong gains, and Vijay also has been recommending that one. But how would you look at the gains? Do you see Chinese demand and their efforts to spur growth, all of that supporting the prices in coming days?
again, it's firmly, for me, it's firmly locked into emerging market growth, particularly China. So where we look for metal prices, I mean, you look at two elements. I mean, obviously we've talked about the inventory side of it. The other side of it is emerging markets, and a lot of it is firmly interlocked with Chinese growth. So the positive side of that element is obviously that we've already seen the Chinese monetary authorities look to try and kickstart growth to give it a softer landing in terms of where growth is slowing down as opposed to the harder one, which we all were obviously fearing. So if we can continue to see a lot more support from the Chinese authorities in terms of monetary policy, like cutting bank reserve ratio requirements, maybe even an interest rate cut, and that could help to spur on prices. But again, that's where we're kind of interlocked at the moment, and that's where one of the key correlations are.
Naveen, what is your pick in the whole of this base metal space? Because we have seen most of those metals actually gain up in the recent days. Which one are you playing up on?
Nothing on the positive side, Manisha. I don't think so that there is any positive for the day trading or something for the next 1 or 2 days, because the selling pressure would continue to some extent of the highs we have seen after the Greece bailout. See, one more thing, we have seen yesterday the Fitch downgrading the Greece debt, and it is kind of a restrictive default now, which they are talking about. So all that scenario leads into some kind of a pressure on the base metals, and I think for the intraday, Manisha, just for the intraday, one can sell the copper contract on the MCX, the February month contract, at around 417 or so. The current prices are hovering around 415. So I think with a downside target of 411 or 412, one can put a stop loss for 421, but strictly for the intraday for the evening session.
Okay, Raymond, one final question to you on as well on metals, which according to you has the fundamental strength to sustain gains, and which factors are you looking for? Chinese demand or Europe debt concerns as data, more or less, which is the major mover according to you for the metal prices?
Well, in terms of the majors, I mean, obviously you look at gold and silver, for instance, and to a lesser degree copper, but there are a few things that you need to look at to help spur on growth of prices. So one is obviously emerging markets. Another one is quantitative easing. I mean, we really need, one of the things that could really help metal prices, particularly commodities in terms of demand, would be increasing flows of liquidity, and one of the ways of doing that is obviously quantitative easing. So it's kind of been locked in with what the Fed policy could be. We saw the FOMC minutes just last week say a little bit more not as dovish as one would hope. I mean, there was a bit of a disparity of views in terms of whether they would announce or consider more easing in terms of a QE3 perspective. So you look at those sort of markets. I mean, that's one of the sort of elements, plus Chinese growth, obviously, that's going to help to inflate asset prices, such as you're seeing with metal prices. One thing I would note is silver is actually quite an interesting level at the moment. I mean, it's sort of trading around some key resistance levels. So if it does push on another sort of 3 or 4%, then that could help to give it a bit more of a platform to push higher. So we need to see silver through the $37 level. If that happens, then it could be a little bit more brighter prospects rather. But again, we are sort of looking more towards liquidity flows and also Chinese growth. Those two elements could help to inflate asset prices in terms of metals.
So more liquidity is what is pushing the prices higher, inflating the prices rather. But Naveen, how are you looking at the silver prices? Because we've seen good gains into that one as well. $34 is holding. Are you betting on 35 now?
Manisha, can be a little upside, but I don't see much of an upside. Maybe the gold positivity can come into the prices for a short term, but I don't see much of the base metal side coming onto the view for the silver prices. So overall 57, 58 is what on the Indian markets we are seeing. For India market, we see 56 to the downside and around 58.5 to 59 levels on the upside. Talking about internationally, as I said, 35, 36 on the upside and $32 on the downside, but then it would be a kind of a range bound for on account of both the precious metals and the base metals category, how they behave in the markets days to come.
All right, Naveen, thank you so much for joining us. That's the view coming in from Angel Commodities, buying on gold and crude and selling on to copper. Thank you so much, Joshua Raymond, for joining us as well, and his views, of course, on very bullish base metal prices going forward.